pleasure to bring on board the one and only Jim Rogers to talk about what his view on commodities is, where he feels markets are headed, and in general, how should central banks deal with this kind of inflationary problem. Jim, good morning. So nice to see you.
Good morning. I'm delighted to be here.
You've been long, you've been bullish, and you've been recommending our viewers to buy into commodities. Buy sugar, buy rice, buy coffee. Don't drink coffee, but buy coffee futures. What would you advise your viewers now?
Well, as I look at the world, once there's peace in Ukraine, we're going to have a big rally. Commodities will probably go down for a while, and that's what I would buy when that rally starts. Because commodities before this is over are going to be very strong because there's still gigantic money printing all over the world.
Why do you say there is gigantic money printing? Because the US Fed is saying that they would start normalizing. Other central bankers are also saying that they will start normalizing.
First of all, I've been around long enough not to listen to these guys. I know they rarely tell the truth, not just because they're not very smart. They're not necessarily lying, but no, the U.S. Fed, I'll talk about them, have more than doubled the amount of their balance sheet in a very short period of time. And even if they cut back for a while, it's not going to be enough to make up for the gigantic money printing that's been going on. And you know as well as I do that when the markets start getting weak, they will panic. Remember, these guys are just academics and bureaucrats. They want to save their job. They don't know what they're doing.
What are the chances that Fed and other central bankers, just like they got their assessment of inflation wrong, they called inflation transitory, now they're calling it public enemy number one, they may actually overshoot their target, which is that they may over tighten.
In India, you've had one of the best central bankers the world has seen in the last couple of decades. He's gone now. I wish he would go to Washington and run our central bank. There have only been two or three good central bankers in the last few decades. They always get it wrong, and they will probably get it wrong again. When there's peace, they will think everything is okay now. Commodities will go down for a while, and then they will start printing money again. They don't care about you and me. They care about their jobs.
Okay. When you say you would buy commodities when they correct, where are you leaning? Hard commodities, precious metals, soft commodities?
Well, agriculture has still been the biggest disaster of the past few decades, so I would continue to buy agriculture. Agriculture has done very well in the last year or two, but when we have a correction, that's where I would focus. But precious metals, if silver and gold go down, which I suspect they will, I would buy more silver. It just depends on how the markets react. Maybe energy, but certainly agriculture, certainly silver.
Right now, China is is quarantined. The Chinese economy is quarantined. The country is quarantined because of COVID restrictions. We don't know when that will open. But when that will open, what will it do to demand of commodities?
Well, you should ask ET now. ET now has the answers. Now, when the Chinese economy opens again, it will cause bigger demands in commodities. They have been working down their inventories because they've been closed and they cannot produce a lot. So demand for everything will go up again, especially energy, especially agriculture. Metals will go up. The demand for everything will go up again. It is still the second largest or maybe the largest economy in the world.
I'll like to draw your attention to what's happening in the US economy. 3 days ago, world's biggest retailer Walmart spoke about a slowdown. If I look at US housing data, mortgage rates are at 5.5% and housing rates are coming down. Is there a case that the biggest consumer, which is the American consumer, is slowing down and that will have an impact on global demand, exporting countries like China, exporting industries like textiles and automobiles from India?
Well, the US economy has had the longest expansion without a problem in history. Starting in 2009, things have not had a big recession. That's never happened in American history. But once this peace comes, if you ask me, the people will think everything is okay again. The economy will start reviving again. Central bankers will not be so tight anymore. And we will have a big rally in the economy and in the markets. But I suspect that that's going to be the last big rally. This has been going on longer than anything in American history. Inflation, it will come back, continue to come back. Interest rates will go higher. I mean, I would like to be wrong, but I don't see how it can change unless something else happens in the world, which I do not see.
So, if interest rates are likely to stay high and go higher, and if inflation is here to stay, does that mean that equities as an asset class should not be the preferred asset class? Because equities does well when there is drop in interest rates and uptick in demand.
Well, I mean, maybe the economy is going to go on forever. Maybe the stock market is going to go on forever. Maybe it's different this time. I've heard that many times in my life. It's never been different. And I don't like saying it. I'm an American citizen, but America is the largest debtor nation in the history of the world now. America has been pulling out all the stops, including the central bank. I mean, maybe something has changed. Maybe life is different. Maybe history is different. Maybe economics are different now. But I doubt it.
So, are you still stacking up both gold and silver under your mattress? And
Well,
in your pocket where you always keep some silver coins?
I have my silver coins. I'll find them somewhere.
There
Silver.
you go. There you go.
Yes, yes,
Which
yes.
side is the gold coin?
I have the gold. I'll find it somewhere. I'll show you a gold coin too. Gold, gold,
There you
gold.
go. There you go. You're the walking man with gold and silver, if I may say so.
But I'm not buying either right now. If and when they go down, I will buy more of both, probably more silver because silver is cheaper. But no, I mean, I don't like saying this, but the world is going to have serious problems sometime in the next decade. And when we have problems, people are losing more and more confidence in money and in central banks. And throughout history, silver and gold have been the things to protect you. And I will buy more again.
Aren't we going through a serious problem already? Inflation at a 40-year high, central bankers admitting that they've gone wrong, equity markets collapsing, the consumer is feeling the pain. Last 2 or 3 years of equity investments have given zero returns. So isn't there enough problem in the world already?
See, you've been watching ET now. You know what's going on. Well done, well done. But remember, when the Ukraine situation calms down, many people will think everything will be okay now. Wheat prices will go down. Oil prices will go down because Russia and Ukraine produce a lot of wheat and agriculture and oil. And so people will think everything will be okay for a while. But in my view, they will not be okay for a while. It'll be a temporary thing. So at that point, I would buy more more commodities, more gold, more silver, and I would be getting ready to sell and sell short stocks.
Well, I distinctly remember this conversation we had about 13 months ago, and you said, look, it's not the best trade in the world, but I'm actually long US dollar. And US dollar, barring last night's hiccup, actually made a new high. Is there more strength left in long dollar trade?
Well, I still own US dollars. I have not sold any US dollars. People in turmoil think the safe haven is the US dollar. So I will continue to own my US dollars, but you're insightful because I expect when this next big rally comes, that the US dollar will certainly go up some more, but it's getting close to the end for the US dollar. The US dollar has been on top for nearly 100 years, or certainly over 50 or 60 years. So I don't like saying it, but the U.S. is the largest debtor nation in world history, and the world is looking for something to replace it or compete with the dollar. You saw what happened with the Russians recently. America just blocked all of their assets. That makes many people worry, and they must find something to compete with the dollar because America just took the Russians' money away. They didn't go to court or anything. They just took the money. Well, people don't like that. And so many countries in the world, including India, are looking for something to compete with the US dollar. So am I. The US can do anything they want. And if they take your dollars, you need to have an alternative.
What is your understanding on the geopolitical front? I'm not requesting you to give me a verdict on when the war will end, but purely what exactly are financial markets pricing in? Are they pricing in the war between Russia and Ukraine? That's it. Or financial markets are already pricing in the war will the war will extend itself and there would be more European countries joining it. What I'm trying to understand from you, what financial markets are betting on?
Well, right now, the financial markets are very worried. That's why they've been going down. They're worried about war. They're worried about inflation, worried about many things. But there's a huge amount of pessimism, which has arisen, as you know. If you look at the Western markets, I'll use those, there's a lot of pessimism, and that usually leads to a big rally, nearly always when everybody's pessimistic. I expect that rally to come before long, and it may become because of peace in Ukraine. I don't know why it will come. You never know, but when everybody's pessimistic, it leads to people having a big rally. And if peace comes, with all this huge pessimism, we'll have a big rally in financial markets, but that will probably be the last rally. I mean, it could last for several weeks, even a few months, but it will probably be the last rally.
Jim, you have the experience of investing when there is strong asset inflation and when there is strong underlying commodity inflation. I think the setup is pointing to that strong commodity stroke asset price inflation at least for next 3 years. So apart from owning commodities, what else one can do to Teflon coat their assets or their investments in this rising inflationary environment?
Well, first of all, you should only invest in what you know a lot about. Don't listen to me, or maybe you can listen to ET now, but for most part, only invest in what you know about. I see more inflation coming. It's been a long time since we've had inflation. I see more inflation coming, and that normally means you should own real assets, whether it's sugar or silver or whatever. And that's how I'm playing the world in the future, the next 2 or 3 years. We haven't had a problem in American economy since 2009. It's time. So I would not be terribly optimistic about stocks, at least after the next rally. And maybe I'll even have to sell my US dollars. But at the moment, I own US dollars, I own stocks, and I own commodities. And I am looking in the big rally to sell my stocks and buy more commodities.
Jim, the experience for global investors who've invested in China in the last 3-4 years has been terrible, horrible. I'm not getting into the patriotic part that why we always say that India is the best destination. But if I look at the experience of global investors, investing into Chinese equities has not been very rewarding. What implications do you think that will have on global emerging market flows?
Well, India has been fabulous. I've said, as you know, if you can only visit one country, visit India. It's a great country for many ways. And the stock market has been good recently, while the Chinese market has not been very good recently. When we have the change, which I told you I think is coming, I would probably then buy Chinese shares if they continue to go down, because by then it will be one of the cheaper markets in the world. It has not done well this year, as you know, but I like to buy things that are depressed. I don't like to buy things that are making new highs. I like to buy low.
Buying debt or investing into bonds for next 2, 3, 4 years, whether it is Indian bonds or global bonds, whether it is the US 10-year treasury or a 2-year treasury, you think it's a bad idea?
I think buying bonds is one of the worst ideas that anybody could have now, unless you're a good trader. The bond interest rates are the lowest in recorded history all over the world because there's been so much money printing and so much issuing of, currency. And we have never, and again, I'm going to use the US to be a little more neutral, These interest rates have never been this low in the entire history of the United States and in most countries in the world. That is not normal. Interest rates have been going down for 40 years, over 40, 41 years. So that is going to change. And interest rates are terribly, terribly, terribly low. Inflation's coming back. I cannot see any case for buying bonds unless there are special situation bonds. If you know a company that bonds have collapsed and they're turning around, maybe. But otherwise, I see no reason to buy bonds anywhere in the world except for a trading rally.
Which is your favorite ETF right now? If somebody is looking at investing the ETF way, which are the ETFs you would recommend? Whether it is equities or whether it is commodities.
Well, I would invest in commodity ETFs on the New York Stock Exchange, ETA for agriculture, ETI for commodities, ETN, ETZ, the ETZ. These are all commodity indices. They're the best. They've outperformed other indices. So that's, if I were buying any ETF now, I would probably buy those agricultural ETFs, maybe not Japan, no, not China, no, that's what I would buy.
Would you be tempted to look at investing into a ETF, which is India dedicated ETF, purely looking at the Nifty or the Sensex?
Wait, say that again?
No, would you be tempted to look at let's say a ETF, a India dedicated stock market ETF, which invests in the Nifty or the Sensex?
Yeah, yes. I have owned Indian ETFs in my investing history. Yes, if it goes down a lot, of course. No, India has many things going for it, but right now, stocks in India are not historically cheap.
Jim, historically, when markets have bottomed out, and I'm looking at the last two instances just for the benefit of our viewers, 2008 crisis and 2020 COVID crisis, the crisis got averted because of central bank policy action. Central bank came out and they started printing a lot of money. Right now, central bankers are going against you. Does that make this slowdown or crisis different?
They want to keep their jobs. They think that if they print a lot of money, assets will go up, people will be happy, and they can keep their jobs. They don't care about you or me or our children. They care about keeping their jobs. And what they think is that as long as they print money, assets will go up and everybody will be happy. I don't think that. My children are inheriting huge problems because these guys have printed huge amounts of money and borrowed huge amounts of money. In my view, that is not good for people. It's good short term, but my children are going to have a serious problem. They're American citizens. They're going to have huge problems that they will inherit.
So, Jim, just to wrap it up with a couple of last follow-up questions. I'll not extend my appointment beyond that. Jim, when do you think central bankers will reverse? Today, they're calling inflation as their public enemy number one. When do you think demand considerations and political considerations will force J. Paul to just move from an hawkish stance to a dovish stance? Could it happen this year or early part of next year?
Well, the answer is when peace comes to Ukraine, you will see prices of wheat go down, you will see prices of agriculture go down, you will see prices of energy go down. At that point, central banks will think, and many people will think, okay, everything is okay now. The inflation problem is okay, commodity prices are coming down, so we don't have to be so strict. At that point, they will change, they will start to be softer again, looser again. And that's when everybody will say everything is great. Stock markets will go up one last time. And that's when we should all run for the hills. That's when I, anyway, will start selling stocks and start selling stocks short. I have not done that yet, but I plan to.
Just to wrap it up, Jim, now you carry a gold coin in your pocket, you carry a silver coin in your pocket. Now, Bitcoin cannot be carried in your pocket. But do you own Bitcoin?
I do not own any cryptocurrencies. I wish I had bought Bitcoin at $1. $5? Of course, I wish I had. I don't have great confidence in the future of cryptocurrency. Well, I have great confidence in the future of government cryptocurrencies. All governments are working on putting money on the computer, and it will be, but it will be their money. It will not be money that could compete with government money. So, yes, I have optimism about the future of crypto money, but government crypto money, not competing crypto money. Governments do not like competition. They like to keep their monopoly.
Well, good old Jim Rogers carries a gold coin, loves to drink his coffee in a silver glass or flask, if I may say so, and does not believe in carrying Bitcoin. Cheers to you, sir, and thank you very much for joining us.
And next time I'm in India, I will bring you a silver coin, not a gold coin. I'll
You
bring
know,
you a silver coin.
in India, those are called gifts and blessings. So I look forward to that. Thank you,
I
sir.
will bring my blessing to you.